Hi, I'm Wayne Kleiner with Kleiner Insurance Group in Winston-Salem, North Carolina. And I'm here today to talk about what I call the audit trap, and especially how it affects small contractors. Small contractors buy general liability and workers' comp policies pretty routinely, and these policies are rated based on the payroll that they generate during that policy term. Now, as a small contractor, you may be tempted to lowball your payroll and estimate a lower amount than you're actually going to expect to have during that policy year. And the reason you might want to do this is really because this gives you a chance to pay less premium up front for those policies. But the problem is, this can lead to what I call the audit trap, which is a real sort of cash flow disaster for the small contractor. And here's how it works. You see, at the end of your policy year, the insurance company is going to come along and say, we need to know what your actual payroll was for that time period. So we need to take a look at your books and see what that is. Well, when they do that, they're going to find that your payroll is much higher than you estimated. Let's say, for example, that your payroll was $100,000 a year, but you had estimated at $50,000 a year in order to keep your premium low. Well, then here we are a year and a month past the time you originally wrote that policy, and the audit comes in, and now you owe again as much premium as you paid in the first year because your payroll is essentially double what you estimated. If that's not bad enough, and that's due right away. But here's the bad news. The insurance company at that moment in time now has the right to increase your new or your renewal policy by that amount to reflect the payroll they found on audit. So now we have an additional premium for the old term in the audit and an additional premium of the same amount in the new term for the new payroll amounts that have been reflected by that audit. This can be a cash flow disaster for a small contractor. Now, there is a way to do this. You can play this game if you reserve the money and put it away in an account so it doesn't create the cash flow crimp once the audit comes in. But in all honesty, with interest rates as low as they are and the cost of borrowing money as cheap as it is today, it really is probably more work than it's worth to go through this trouble. Your best plan is to make sure that you hire an independent insurance agent that specializes in contractors to help you with these policies. Then you can go through with that agent, detail by detail, and choose the payroll that makes sense. And if you're going to play the audit game, just beware, don't get caught with the cash flow trap that I call the audit trap. At Kleiner Insurance, we specialize in small contractors of all types. And we write contractors all over the state of North Carolina and help them with their insurance and make sure they get their audits running smoothly. If we can help you, or even just give you an insurance second opinion on your contractor's insurance, please give us a call toll free at 877-687-7557, or better yet, visit us on the web at www.thecontractorshelper.com.